Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
Where does Janet Yellen, the Secretary of the Treasury, live? Presuming it's in California, she's paying a state marginal income tax rate of perhaps 13.3%. That's not a small number compared to most states around the country. In fact, compared to where we are here today in Maryland, which is considered fairly high at 8%, that's a bargain to be here. So why doesn't she just move across the state line into Nevada where the rate is zero? You can't get much better than that. Well, the reason is that she would have to actually pack her bags and move across the line. That may not be so easy for her to do given her location. Maybe she likes it in California. A lot of people do like it there. So that's a barrier of moving to the lower tax rate in Nevada, even though it's a state that a lot of people do retire to for that reason. But it takes that move to convince California you're no longer there, that you're domiciled in Nevada. So why did she come out earlier this month and say that the world ought to have minimum corporate tax rates in all the different countries? Well, the reason is because for a corporation to set up business almost anywhere it wants to, a multinational enterprise, as the name describes itself, they're all over the place. It's not so difficult for them to place their assets, particularly assets that are easy to move, like intangible assets. Think of trademarks, pharmaceutical companies with their patents. Yeah, those are the kinds of companies that can take advantage of low tax rates in countries around the world and avoid the higher taxing rate countries. All right, so let's see what all this means. Why now is Janet Yellen saying, let's have a minimum corporate tax rate around the world? It's not a new idea. No, not at all. In fact, last summer in the Organization for Economic Cooperation and Development, the OECD, they published their second pillar of their BEPS project, which is short for base erosion and profit sharing, a project designed to create fairness around the world so that no countries are duly burdened by other countries' tax rates or tax laws, and business can play on a fair playing field and reducing what's called tax competition, or in terms of tax rates, what's called the race to the bottom or the race to zero. And that's what Janet Yellen's worried about right now, and she's worried about it now as opposed to last summer when the OECD endorsed the idea, because the United States just changed their game. They went from, in 2017, at 35% corporate tax rate, one of the highest of the world, to 21% on the Trump Tax Cut and Jobs Act in 2017, reducing their rates and creating a situation where we were lower than the average 24% rate for all countries. So all of a sudden, the United States is looking pretty good for everybody to come here to do their business and create a nice tax base for us. Fast forward to 2020 and oops, the pandemic. Now in 2021, the Biden administration's got to raise tax rates because they need to collect revenue to pay for the price of the pandemic. The proposal is to move the corporate rate up to 28%, and that's not going to put us in the same position as being the tax haven of the world, potentially. And so now it's like, oh, wait a minute. This is Miss Yellen and our country in a way. Oh, wait a minute. We have to have a minimum tax. In other words, duplicitously, let's not go play the game of, since the United States is back up at 28%, let's attract multinational enterprises to our country by lowering our rates and making it attractive for them to move there and pay less tax. Well, that's my point. You can say to me, well, maybe you're being a little harsh in your judgment. I got another point. In 2017, the OECD convened a fairly large convention of over 100 countries in Paris to discuss the international tax regime and trying to make it fair for all countries to avoid too much tax competition to their detriment. And they came up with an agreement, they drafted, and 68 countries signed on. It's the Multilateral Tax Agreement, and it's a sort of a groundbreaking way of moving into a new type of way of controlling countries and controlling the international tax environment, with an effort to get away from 2,500 plus bilateral tax treaties that are within individual companies, just bilateral, to a multilateral agreement encompassing the world, so to speak. And absent from signing on to that agreement has been the United States. Now, of course, they've made the argument, well, our laws take care of it. But yeah, during these past couple of years, the United States had no incentive to join, because why should they want to have fairness when the United States was playing unfair? And that's the issue. So I think it's high time for the United States to really join into the partnership that already exists between the OECD and the United Nations Tax Committee. They're doing a lot of work to creating a platform for international tax fairness. And that's where I think we need to go. Stop being duplicitous.